and welcome to this video recording in the RICS Tech Partner Program. My name is Andrew Knight, and I head up the Data and Tech Thought Leadership part within the Standard Regulatory and Thought Leadership Directorate at RICS. I've been with RICS for 10 years now, working in the standards team and also working on engagement with the financial sector centered on the City of London. So today I'm really pleased to welcome Thibault Weston Smith from Realty Corporation to talk about his backstory as a member, but also what he does now in the PropTech sector. So welcome, Thibault.
Hi, Andrew. How are you doing?
I'm doing very well.
Delighted and honored to be here with you today.
Indeed. Well, first of all, perhaps you could give me a bit of background on your personal backstory before we talk about Realty, because I know you've done a lot of interesting stuff in the past and obviously now in the PropTech sector. So perhaps you could paint a bit of a picture on your backstory, Thibault.
Sure. So my name is Thibault Weston Smith. I am a principal at Realty Corporation, a firm based in London. To give you some background about myself, so I'm half French, half British, was born and raised in France, did a business school called ESSEC, specialized in finance and real estate. I've always been interested in real estate, numbers, entrepreneurship. So I decided to specialize in this and then kick off my career working in the sector. Once I was out of school, I started working for a firm called Tishman Speyer, headquartered in New York. I started in their Paris office. Large investment manager, an asset manager, has office buildings and commercial buildings for most of it around the world in large cities. I started as an analyst on the Paris team, working on the acquisitions, asset management, and leasing side. So focused on sourcing new opportunities, underwriting it, and working with our leadership team to make sure that we can find the right opportunities for our investors. Asset management, meaning so active asset management, rolling out the business plan that was pre-agreed with investors, and making sure that we can add value for them and arbitrage also when to implement new strategies or to dispose of the assets if necessary. In 2015, I moved to the US. I was in Washington, DC for a few years, still with Tishman Speyer on the investment team. I also got involved a lot on the innovation front. In particular, I was responsible for a new initiative called ZOE that Tishman Speyer implemented globally, and I was responsible for its rollout in Washington, DC. So what ZOE is a new set of amenities that was launched in 2017, so amenities and services provided to office tenants. And so it was super exciting for me because obviously, one is this is the future of work, being able to provide new services, amenities to your tenants, whether it's simple, I would say, concierge services such as dry cleaning, being able to have your massage on site, for example, if you want this, haircuts, etc. Anything that can be done during your breaks in the day to keep your employees and people motivated. So we started building this whole ecosystem around this and powering it with a tech and an app that was used by the people working in our buildings. And we had very, very good success around this. It was super exciting because obviously we had to establish new relationships with all these service providers. And obviously this has a big impact on your leasing front as well, as tenants are keen on having this type of services in the buildings they sign leases on. So that was my life for 4 years. I left Tishman Speyer in 2019. We moved to Africa with my wife. I was in Kenya for almost 2 years. I was the CFO and head of strategic projects for a startup over there that focuses on innovation in the construction sector. The company is called 14 Trees. It's a joint venture between Lafarge Holcim, so the large cement leader,
yeah,
and the CVC group, so the British government, taxpayers' money that is invested in projects or companies in developing countries. And so the purpose of this company is to launch new innovations tied to construction in developing countries and in particular in Africa. So the first innovation was an eco-friendly brick called Eurobrick that allowed, and that's where the name of the company came from, to save 14 trees per house built with these bricks. And so several factories in countries, for example, in Malawi, one of the poorest countries in the world, that allows to prevent and reduce deforestation, which is a big issue in some of these countries. One of the things I worked on a lot was to use construction 3D printing in the country. So we kicked it off in sub-Saharan Africa. We printed the first house using 3D printing technology back in November of 2020, and we 3D printed the first school in the world at the same time, using these big machines that pour layers of material. In this situation, it was eco-friendly concrete to basically print it, no labor involved as far as the walls are erected, and a very fast and sustainable solution, which is very promising for the continent. And obviously the company now is growing this product and opening new projects using this technology. So earlier this year, I left 14 Trees to come back to Europe, and I joined Realty Corporation as a principal, and I'm focused on two things: the real estate side, real estate investment side, and the PropTech VC, so venture capital that I'll talk about in a second.
That's great. Well, it's obviously been a fascinating journey for you, and it's great to hear the variety that you've already managed to cram into your career so far. So tell us more about Realty Corp, and particularly what that process of investment looks like in the PropTech market. Selection criteria, the support, kind of funding, and any kind of stories you might be able to share about the kind of firms you've worked with.
Sure. So Realty Corp, so we're based in London. Our managing partner, John Leary, has been in the industry, in the real estate private equity industry, his whole career. He used to work for Blackstone, Goldman Sachs, Tishman Speyer, before he started Realty Corporation in 2017. And so we're a privately held firm with both real estate investments and advisory activities in Europe and the United States. And as you mentioned, we also have a PropTech investment arm that we're deploying, so our own balance sheet that we're deploying in startups that are PropTech related. So the first investment we made was actually a strategic investment in the management company of Pi Labs, which is one of the leading PropTech VC funds in Europe, also based in London. And since then, we've also invested in 6 other companies direct, and actually a 7th one just got approved about 2 weeks ago. So Realty Corporation, just to give you a picture, what we do is we, unlike other boutiques that limit themselves perhaps to specific countries or specific asset classes, we focus really on strategies and compelling real estate returns, regardless of the product type and the geography. Our team is surrounded of investment professionals that have various experiences in the real estate industry. For example, I worked, through my experience with Tishman Speyer, I'm more familiar with the commercial side of the business. We have retail experts, logistics experts, residential experts, development, non-development. And from a geography standpoint, our core businesses in Europe, we also have a lot of activity in the US. Right. On tech specifically, so we focus on how technology can be used to improve products, services, buildings, and deliver a meaningful impact on how we live, work, and shop. As simple as this, but this is like the underlying start for us to look at a company, is to understand technologies that can change the way people transact and interact with the built world, and we want to be active participants in this change. So we're generally super excited to meet new entrepreneurs every day who put innovation and sustainability at the forefront of their business, and that are helping to build a new real estate landscape going forward. You were asking about the process of tech investments at Realty Corporation. To provide you with more details on this, so we look at everything. I mean, that's the simple. We are curious and interested about everything, and you never know what type of idea is going to come out of the blue and strike you as something that has a big impact. So we of course we have our own thoughts about macro trends, and I'll talk about it later on, but how the landscape is evolving, and you know, what type of big picture trends, depending on the assets, the markets, the use of technology, how things are evolving. But the truth is, in the PropTech world, there is so much to be done, that there are so many new ideas and companies that are out there trying to solve specific needs, that we are generally interested in everything. Now, that said, from a geography standpoint, we tend to look more at Europe, simply because this overlaps with our real estate activity, and same for the US. For the 7 PropTech investments that we've made to date, they are all in Europe or close to Europe. We haven't invested yet in the US, and we haven't looked at the APAC region, for example. From a size standpoint, we are super excited about early stage companies. Yeah. So a company that you would qualify from the seed plus, and Series A rounds, and simply because this is where, you know, we see the greatest growth and return appetite for us. For companies that have already a proven product, proven strategy, some revenue, some level of revenues, and are able to scale up as they meet new customers, new opportunities, raising money to funnel their growth. And so we're super excited to be, you know, getting into the cap table and being part of their adventure at this point in time, where, you know, they're going to have a turbocharged growth going forward. Perhaps to talk about our process. So you were mentioning you want to understand how we, you know, how we look at companies, and how, you know, we screen basically companies that come to us. It's really not, it's not a science, it's an art. and I'll talk about it in a second, about the process, but there's no golden rule as to, you know, what works, and obviously before anything, what really matters are, in my opinion at least, are 3 things when we meet companies. The people. You need to believe in people. It's early stage venture, and, you know, if you don't trust the people, if you don't see them with a vision, if you don't think they can pivot, if there is a need to pivot and just, you know, think of moving on, and if you can't trust the people who are leading the company, then there's no point in investing in it. So that's the #1 criteria, is understanding who the people leading the company are, whether they're a single CEO or a dual leadership or more. It's always interesting to seeing this, and also to be able to identify how, you know, a team works together, and not just the people leading the company, but also the whole team that are driving the boat. So that's #1. And then #2 is the product, of course, understanding the products. And this is like the basic thing, but like for us, if we don't understand the product, we will not invest in it. Like, and there are plenty of sophisticated solutions, and I don't mean to say that, you know, there are a lot of complicated ideas out there. Like if you're talking about blockchain, which is an interesting sector, and there's plenty of opportunities. For example, the use of cryptocurrencies merged with like stock markets, etc. I mean, if you're not able to simply explain what your product is and what your tech is doing, then it really needs to be, you know, a very sophisticated or understandable product. But we will tend to, you know, not want to move forward with this type of company. So we like simple product we can understand. And why is that? Because we can explain it to our own network and our own relationships in the industry, so that they can themselves use it in their portfolio, using it, leverage it for their assets, and being used actually in their buildings. So that's #2, and then #3 is obviously finding a good fit with what we do. We come in, you know, our investment tickets. We haven't raised the fund. We're deploying our own balance sheet, and obviously we're seen as a strategic investor. So we need to find a fit with the company that we're investing in, such that we can add value to them. And we're not a passive investor in the sense that, you know, it's not just about the money. There's plenty of money out there today, and at least in 2021. And what is important for money is to be qualified money. And this is what, you know, we see in our relationships that we build with entrepreneurs, is that they value a lot what we can bring outside of our capital. And this is super important, because obviously, as you're bringing new people on board as part of your investors, then the idea is really to leverage this, talk about it in your network, put them in front of other potential customers, other potential perhaps companies that they can have discussions with from a PropTech startup level, and perhaps there are some joint venture collaboration, perhaps even M&A discussions that can arise from this. But it's super important to be able to match these companies with what we do as well, and this is how we get along well with these companies.
As you say, it's critical that you're seen as an active investor. You really are getting involved, not just placing capital there, but really supporting and, as you say, leveraging the investment you've made.
Absolutely. I mean, to make it work. I mean, except at least for the early stage side, usually what these people have done is that they have built a product that works, or if it doesn't, I mean, if there are certain things that don't work, they are conscious of it and have a product roadmap such that you can improve it. And this product has satisfied needs or provide a service that real estate owners or real estate stakeholders are using, and this can be used for more, whether it's more asset classes, more people, more owners, more countries. All of this is, there are good trends, and they are at this point where it's all about, growing super fast and having something that can be used by more people. So perhaps to walk you through how our process works. Obviously, before anything, we're on constant market watch, and we are out there in the market, meeting with people, but not just the startups, but the whole ecosystem. So other investors, incubators, accelerator programs, all people that have a direct or indirect impact on the way the PropTech scene is growing today. So when we have companies that come to us, either cold calls, they can reach out to us, and we've seen this. I mean, we have a big pipeline of people who contact us directly on LinkedIn, over our website, the email, in conferences, etc. Or we also have what we call qualified pipeline, meaning people who are brought to us by our relationships. So, for example, I mentioned we have this big relationship with Pineapps or other industry peers who just share notes, and this is actually a very pleasant moment to be in the market. Though it's a very competitive world, people tend to be open about sharing ideas, sharing products, wanting to bounce ideas among one another, and seeing how one idea can work for you, what you think about it, what the risks are, how they see them grow, etc. So people are open-minded about how they can share it, and though there are a limited number of opportunities to invest, of good opportunities to be investing in, people would rather build a good consortium of investors and kind of build these relationships with other players in the industry than just try and keep the deals to themselves and not share any information about it. So typically we would receive this information from the entrepreneurs, a basic pitch deck that they have, and at this stage of the process, even before we jump on a call with someone, we'd probably provide guidance. Yes, no, we're interested, just based on them sending information and filling preliminary questions that we have for them. I'd say about 50% of our pipeline drops at this point in time. To give you a sense, in 6 months, we have seen over 300 companies that came to us. At this point in time, we already have like 50% that drops. After this, we're interested, obviously, in jumping on a call with these founders to understand what they're doing and who they are. As I mentioned, people, product, and fit with us are important, so we want to meet the people. And so one of our team members will meet with them, and then we decide whether we move to the next step, which is a second meeting, a more detailed review. And between these two phases, I'd say you lose another 50%, so 25% of the initial pipeline. After this, we, as a team, we review in details. We have built a proprietary analysis framework that we call PURE. P as in product, U as in unique team and unique strategy, R as in Realty Corporation, and E as in economics. So PURE, P-U-R-E. And if the company scores well in this, then we take it to the next step, which is looping our investment committee members, the fact that we are interested in this company and we want to spend more time on the due diligence to further evaluate. This is important because obviously you see a lot of opportunities out there. Our team, we're a small team, and we're able to look at a lot of stuff because we have put in place this process that allows us to just focus on the ones that we are interested to work on. So after from there, it's really, you know, due diligence. So other meetings, discussions, access to data room, being able to further analyze what's going on. And I'd say from the initial pipeline you probably have only 5% left at this point in the stage. So only limited companies that we're actually keen on exploring further. And then our typical system is then to build an investment committee memo, present it to investment committee. Investment committee will challenge and question what we are presenting and whether it's the right strategy. And we then decide, the investment committee decides whether we move forward in investing or not. And so far, we've agreed on investing in 5 companies in the past 6 months. So roughly one per month. And it's been a busy year for the moment.
Well, that's great, and I suppose you've been able to clearly take a lot of the kind of deal flow process from the real estate side and apply that obviously to this kind of methodology with the PropTech side. I guess what I'd be interested to move on to is your kind of views on the kind of past, present, and future of PropTech, and indeed whether the phrase PropTech will perhaps lose its meaning given the number of pieces of data and technology that can be applied across the built environment, and really how you see it going, and perhaps whether we're going to see a similar kind of bust thing as we saw with the dot-com boom in terms of consolidation, and also perhaps finally what it means for the existing real estate firms and the existing members who are going to have to kind of work in a more digital age. How do you see the next few years for PropTech and its evolution?
This is a great question, and I think, I mean, I have my own crystal ball, and I can talk about it, but by no means, this is we don't know how the future is going to be. But I'll provide my own thoughts about it.
Exactly.
And
that's perfect.
Let's even start with the basic comments, which is what's PropTech, and our definition of PropTech among industry peers, I think, differs from one firm to another. As I mentioned, we're keen and we're interested in all sorts of products that have an impact on the built world, but there are several definitions. Whether we've talked about this, Andrew, actually a few times, but companies that would apply for fintech or insurtech or cleantech are also PropTech to some extent because they have an impact on the real estate.
Yeah.
So from that standpoint, there are the view of PropTech as we understand it now, which is technology that has an impact on the real estate or real estate stakeholders. There are definitely what's the past, what's the present, what's the future. So when you ask this question, I actually think like focus on the past. I mean, the past was probably what happened over 10 years ago. So where there was no PropTech per se, like the name didn't exist. We didn't even think about, even fintech was at its early stage, of course, at this point in time. So almost what we could call the stone age of PropTech. So real estate has been an institutionalized financial product for over 30 years with an increasing allocation of funds, and this has been the trend of the industry. It's becoming more of a financial product, and before even PropTech came to play, this has been one of the big evolution, I think, in the industry, is that more and more capital was deployed in the asset class. We have seen asset classes that have become more institutional for real estate owners, and more pension funds, insurance companies, any large fund allocators that have been increasing sovereign wealth funds their allocation to real estate. And why am I mentioning this as part of the past is this has always been a trend that people have been mindful of and wanted to deploy more capital, not necessarily just be in bonds, obligations, and the stock market or private equity, but expanded to real estate as an asset class, as a financial product. So there wasn't any real PropTech then, but there were some changes, in the way Excel was used. I think it has, I didn't live this because I'm only 32 years old, but I know a lot of people have seen this, which is like switching from, making a deal by writing numbers on a piece of paper, or having like, doing math in your head about, you buy the building at X, you're going to spend X in CapEx, and you're going to make such much margin. Now it's all about, real estate projections, like financial projections, cash flows, what's your IRR, what's your equity return, et cetera, et cetera. So it's for this, we have seen some changes, but I wouldn't call it PropTech. The presence, which I qualify as something, in what we've seen in the past, basically 10 years, is more awareness towards the use of technology and the use of new tools, IT tools, the internet, softwares, and not even talk about artificial intelligence, but like just technology as a whole, and being able to use it to better operate. And this has been the awareness stage, I would say, like early years of it. Actually, it's interesting. I was reading just before jumping on this call a new report that was just published by JLL. It just came out today, and they were talking about the past 10 years, and the fact that $100 billion of equity funding has been investing in what they call PropTech in the past decade. And we have seen a large growth of companies, in the past decade, from about what they quoting JLL, 2,000 to 8,000 companies that have grown. And these numbers are only growing faster as we are now, in the second half of 2021. The first half of 2021 had already $10 billion of funding in PropTech, and this is only for 6 months. So as mentioned, 100 billion roughly for the past 10 years, so roughly 10 billion per year. But in reality, it's all back-ended, and we've seen more and more funding in the past few years. So today, PropTech is transforming the way people transact, interact with the built world. I think it's not just because of COVID, and obviously we've all experienced this in the past year and a half, that we have seen a bigger use of technology in the way we interact with our colleagues, with other professionals in the industry, but just more generally that there's a bigger interest in being able to leverage these technologies and doing better management and better use of your buildings. I'm still focused on the investment side, but PropTech, I think one of the first PropTech VC funds that was created is Fifth Wall. That was created, it was only in 2017, so only 4 to perhaps 5 years ago. And since then, there's been a lot of capital being raised in the world, and a lot of deployment of this capital in early stage or in now later stage startups. Talking about the future, I think so. What's next for PropTech? And again, I mean, I'm happy to talk about my own views, but I think let's perhaps focus first on the macro trends that are at stake here and will impact the real estate industry as a whole, which will mean also an acceleration of the use of PropTech. I think so. Worldwide, urbanization is one of the big themes that will impact our cities. So more people between today and in the next 30 years, basically, it's something like 2 billion people to be added in cities, and the rate of urbanization is only growing per UN projections. Population aging on top of this will mean that we have more older people and more senior people in our cities, in our countries, which has an impact in the way real estate is being defined. As an example, in past 10 years, the senior living has been growing as an asset class and has become more of an institutional asset class. This is all tied to some of these macro trends that impact the real estate. ESG, of course. And I'll talk more about sustainability, of course, but which is the first letter. But I mean, in general, the focus about CO2 emissions around the world, decarbonization, net zero impact, and how we can be more sustainable, especially for an asset class, which is one of the asset class to the construction sector that represents roughly 1/3 of all of global CO2 emissions. Digitization, so with populations that are now, heavily reliant on cell phones. I think it's almost like 99% of populations in developed countries, that have cell phones and are able to use this as part of their day-to-day living. And then the last important category is compliance and associated regulations, which will impact, define, and dictate how real estate evolves over time. And it goes from like the GDPR type of regulations to any sustainability or regulations in general for compliance purposes. So these are like all the big trends that have, I think, an impact on the way we need to think about real estate going forward, and how entrepreneurs, PropTech startups are helping to address these needs is super important, because there are certain things that can only be done by the use of technology. And so we're seeing a lot of good trends, exciting entrepreneurs, and who have interesting ideas that are offering these solutions. So I think, for me, when even looking at companies, etc., we are increasingly looking at companies that have like ESG impacts. Like this is, I think, all real estate owners, and especially in the past, I'd say 6 to 12 months, have taken into account this. And what is, interesting to observe is how do people, what can they do to basically be more active on this front, reduce their CO2 emission, or even not even that, first know what their CO2 emissions are, what their energy consumption is in their buildings, have a better understanding of the data. I mean, we all understand, how that we could have access to data and better read our buildings, but it's not the case of the industry today. So being able to find, and the tricky thing is, and one of the interesting things that's going to unveil in the next few years is how real estate owners are going to be implementing PropTech solutions increasingly going forward. And there are a lot of struggles, and it's not because there are solutions out there that people are want to pay for it to find the right solution, that it means that they will be using it. So, one of the big dilemmas that we see today with real estate owners is obviously they don't necessarily have the appropriate teams, like internally, like lack of resources to go out there and find the right people, the right companies, the right products, vet them, and being able to implement them. There is, of course, perhaps some resistance in the industry, lack of change, and this is both at the top and the bottom. We've always done this in the past. Why would we change it going forward? What are the benefits? Of course, the cost. Who picks up the cost? And being able to use it in a way that you see a financial impact and almost near term on what this technology can bring to your business and your building. And of course, it's not all solutions work for everyone. Real estate, one building is very different than another one. And so how do entrepreneurs who are building PropTech products that work for one build it such that it works for another? That's actually, even from our perspective, when we underwrite companies as well, is understanding their scale-up opportunity. How, we'll talk about SaaS platforms, the fact that, you can just come in, and these are the best business models in any tech investments, right? Like companies that you almost have no work to be done. It's you download the software and they bring you a perfect solution that will solve your problems. The tricky thing about real estate is that it's the tangible asset. So how do you use SaaS platforms that actually have a physical impact on the way you're managing your buildings as well? And this takes time. And people, I think, are, and I like to see this in the industry, are generally interested in and keen on testing new ideas, testing new solutions, and being able to solve their problems by using new technologies, new services. But the question for them is how can they get buy-in internally? Can they roll out? And if successful, are they willing to pay for it as well?
So, I mean, how do you see thinking back to kind of an RICS perspective, how do you see PropTech impacting the way, you know, the large existing real estate firms, the sort of non-PropTech firms, and indeed individual members? How do you see that? Do you see that as a merging of the current PropTech firms with a lot of the existing larger real estate firms? And what do you see the sort of, you know, the pressures on skill sets and experience for RICS members? Because you mentioned sometimes lack of resource in terms of the right kind of people internally. What do you think the implications for the profession are?
So there are plenty of different ways, and there's no, you know, one size fits all. I mean, it's every organization has their own ways of functioning, and some are, I would say, perhaps more entrepreneurial in the spirit and are willing to test more and accept that they can fail, rather than other businesses that are not willing to take these risks, because what matters is the quality control, and you cannot take any risks if you manage your buildings. It has to be done in such a way that any risk or any threat to the business is eliminated. And by definition, that's also why there's such a big paradox between the two, because startups are by nature testing stuff.
Yeah.
And will fail, and some will fail, some will succeed. But there is a nature of innovation that has to be accepted by companies. So let's start with this, because basically, you know, a lot of industry players and real estate owners some have taken the prudent approach of being a passive LP, limited partner investor in funds, in PropTech funds. So, and this is why you can explain, you know, all these big PropTech VCs that are able to raise money. The deal with them is, as a real estate owner, we will invest in you. We will give you access to our buildings for us to test and pilot these products. And you, in exchange, you source and identify the right opportunities to be deploying money in these companies. And that is I would say, step one in from an investment standpoint in understanding the right companies. Coming back to your earlier point, staffing, depending on the size of the organization, we're seeing more and more people either being hired in the innovation as an innovation team. For some, they call it even the PropTech team or the PropTech VC team. And I would put this in connection also, again, with any ESG function that we are increasingly seeing in a lot of large companies around the world. For them, you know, so step one is being a passive investor. Step two is being more you know, active investor and being able to source your own opportunities or incubate companies with you. And so you were talking about JLL, for example, CBRE, and though I don't know the program in detail, you know, JLL, for example, has JLL Spark. That is a program that allows them to be in touch with this ecosystem of entrepreneurs and people who have interesting ideas that they can offer on the JLL side to their own customers. And because they have a different range of services, they have a good view about the type of needs that could be found with their customers, whether it's on the facilities management side, on the leasing front, and whatnot. So for them, you know, it's key for them to know what's going on, to understand the trends, and even before even thinking about doing any type of relationship with some of these companies, just to be aware about trends in the market, what ideas exist, and then it's the idea of putting together and connecting the dots between the needs and the solutions. And so they have deployed in a few companies as an example, and other players as well. And this is, you know, we're starting to increasingly see more people doing this, and more players who are willing to, you know, dedicate the resources, the capital, and then and this is and capital is both on the investment side, but also capital to partner within their portfolio or within their customer reach to use these solutions. One of the other ways that is an interesting trend to observe right now is this whole SPAC.
Special purpose access companies. Yeah, the flavor of the month, aren't they, to avoid the IPO costs? So.
and it's a good way. So it's and you know, we can debate whether there are too many SPACs out there for a number of companies who exist, but I think, and so they've been victims of their own success by nature. But I think what this tells also is a willingness on a lot of players' sides to be more active in the growth and the maturation of PropTech companies that have had a successful model, are ready and willing to go public, and need a sponsor, a SPAC sponsor, to make it happen, because it benefits everyone. It benefits the company, it benefits the shareholders who are acquiring the shares in the company, and in general for the PropTech scene, with solutions that are being more mature and are scaled up to the point where it can be global solutions. So I think, listen, there are plenty of ways. A lot of people are still, you know, waiting on the sideline and what should we do about PropTech? Should we do direct investments? It's a very different nature of investment, and we're seeing this, you know, for even for us at Realty Corporation, right? The underwriting that you're doing on the private equity side, where, you know, you're focused on really, I mean, understand the business plan, of course, but trusting more your financial projections than anything else, and this is like almost set in stone. What it's going to vary naturally, because business plans always do. But from a startup standpoint, you know, the pivot of the company could happen overnight, and they realize that it's another strategy that they should focus on, and this never happens in at least in real estate investment side, from what I've seen, that people, you know, can on understanding what you see on the property side, like understanding that something you have been, you know, very successful with, this is where you should allocate all your resources and even disregard all the rest that you've been focused on. And this is how you can grow from being, you know, a $2 million company to being a unicorn, because you can see that this is where you can, you know, need to go fast, raise money to be, you know, the market leader, and grow to a point where you become a unicorn, which is the hidden dream of most entrepreneurs these days, and it's the flavor of the month. They all want to be unicorns. Definitely.
So I suppose, Thibault, as we wrap up, it feels like the PropTech journey has almost only started in terms of the amount of activity and the funding and the potential, I guess, given real estate is not a digitized sector in so many ways. And with those drivers of ESG and urbanization, as you say, these asset classes like senior living, or at the other end, student accommodation or multifamily build to rent, that, you know, we feel like there's a long way to go still in this story of PropTech investment and PropTech becoming a, you know, part of the industry. It's been great to chat, and I look forward to chatting again with our next episode. So for today, thank you very much, and it's been fascinating, Thibault. Thank you.
Thank you, Andrew. This was great. Thank you very much for the opportunity to talk here, and look forward to catching up again.
Indeed.